Hi there, thanks for tuning in. Today we're talking about the second item that you will see in an income statement, and that is called the cost of revenues, or alternatively, the cost of sales. If you want to know what revenue is, then I suggest you watch the video I made before this one where I broke down what revenue means, and the link will be right down in the description. Now, the cost of revenue by definition is simply the costs incurred in the process of producing, marketing, distributing the products and services that the company makes to its customers. These are essentially all the direct costs that you incur while making something. So this will include things such as rents, for example, or salaries that you're paying your workers, the cost of machinery that you may own, or buying tools or upgrading equipment. But this does exclude a couple of other costs. For example, the salaries that management is paid is not included within the cost of revenues. Depending on what the excluded costs are, this may or may not be something you want to take note of. If a company is public, it will usually break down what the costs of their revenues are within their yearly filings. For example, I took a look at the fiscal year 2021 annual report of Corning Glass Works and looked at the cost of revenue section for their definition of it, and here's what they had to say. Their cost of revenue included raw materials consumption, both direct and indirect, salaries, wages and benefits, depreciation and amortization, production utilities, production-related purchasing, warehousing including receiving and inspection, repairs and maintenance, interlocation inventory transfer costs, production and warehouse facility property insurance, rent for production facilities, and other production overhead. So the cost of revenue is actually a number that is generally an addition of many different factors, and all of these factors that are being added together can very much change. If a company has revenue that comes from different streams or different sectors, then in their annual reports you may find a breakdown of the revenue that comes from these different streams and also the respective cost of revenue. Different products may have a wildly different cost of revenue. For example, if you're manufacturing a physical good that has a ton of materials, then your main cost of revenue may come from actually purchasing or using these materials. However, if you're a law firm, for example, then your cost of revenue may come from paying the high salaries that lawyers usually get. So this is something important to take note of, and it may vary wildly per sector how high or low the cost of revenues will be. Now, this was a pretty short video because I feel like cost of revenue or cost of sales is fairly self-explanatory. However, next video we will be breaking down what happens when we grab the revenue and the cost of revenue and all its implications. And once the next video in this series comes out, I will link it below as well, so you can keep checking it out. So with that said, I thank you so much for tuning in once again. And if you want to see more like this, please subscribe and hit the notification button so you can know when the new videos in this series come out. So with that said, thank you so much for watching, and I hope you have an excellent day.